Hi there, I'm James Preston and you're watching 𝐊𝐴 Media live from our Sydney studios, and welcome to the Market Movers program. The Australian share market seems to be displaying muted performance amid the tug of war between healthcare, IT and energy on one hand and the materials sector on the other hand. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. The Australian share market is balancing between positive and negative territories today. The iron ore miners are weighing down the benchmark index, with the broader materials sector trading in red. However, gains in IT, healthcare and energy are keeping the market momentum. The healthcare stocks are trading on a strong note, up over 1%. The sector has delivered a return of roughly 3% for the last 5 days. Oil prices jumped around 2% on Friday after 3 days of consecutive losing, with investors watching a storm brewing up over the western Gulf of Mexico. On Friday, the US National Hurricane Center stated that a weather system over the western Gulf of Mexico has a 40% chance of becoming a cyclone. The most recent update from the centre states that the system weakens and is expected to become a remnant low soon. Whitehaven Coal Limited and fuel refiner Ampol Limited are the top gainers on the energy sub-index. Australian energy producers such as Oil Search Energy, Woodside Petroleum Limited and Santos Limited are also trading in the green zone. However, the index gains are capped amidst strong headwinds. Despite a significant rise on Friday, crude oil witnessed its first weekly loss in May due to a strong sell-off in commodities amid the progress of the US and Iran nuclear deal. Rising coronavirus cases in Asia and higher inflation concerns from Europe, China and the United States of America are offsetting crude oil gains. Moving on, and gold players are trading in green on the ASX 200, given volatile cryptocurrencies, inflation anxiety, along with Friday's upbeat PMIs strengthening the case for Fed tapering and China's crackdown on commodity trading. Silver Lake Resources, Gold Resources and Remulus Resources are among the top 5 ASX gainers amidst growing virus-induced attractiveness of yellow metal. Additionally, global brokerage Jefferies initiated coverage of gold resources with a buy rating. The broker saw potential for expanding the 𝐊𝐤𝐢𝐧𝐞 operations of sufficient reserves were discovered from ongoing drilling activity. Meanwhile, iron ore miners are capping the overall market gains. Asia's iron ore benchmark marked its third losing day on Friday, its second consecutive weekly fall as the largest steel producer. China stepped up its efforts to cool a soaring demand-driven rally in raw material prices. Australian miners such as BHP Group Limited, Rio Tinto and Fortescue Metals Group Limited are taking a hit in today's session. There are some positive movers on the ASX, but before we delve into them, let's take a very short break on 𝐊𝐴 Media.
At 𝐊𝐴 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐴 TV.
Thanks for sticking with us on 𝐊𝐴 Media. I'm James Preston and you're watching the Market Movers Show. We're taking a close look at the Australian markets and surprisingly, IT stocks change the direction from north to south after midday In the morning session, IT stocks were moving northward as investors seemed to focus on the growth-oriented technology sector. But perhaps Friday's Nasdaq performance and global markets reeling from the recent sell-off stimulated by a cryptocurrency crash seem to have taken hold of the bears. Having said that, investors need to take a cautious stance in taking exposure to this space. Signs of surging inflation have bolstered bets that the Federal Reserve may tighten its monetary policy soon. That may further put pressure on rate-sensitive growth stocks like technology shares. Having said that, Codan and 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 are the leading IT gainers. In the latest update, 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 said that it has set up an independent board subcommittee and announced it will make additional board appointments in response to the recent market feedbacks. 𝐊𝐴 is an Australian technology company that produces investigative analytics and intelligence software for extracting knowledge from unstructured data. Shifting focus, and EML Payments and AMP Limited are trading in red territory. Payments company EML was the top loser on ASX last Wednesday, tumbling over 44% after the company in an exchange filing said that the Central Bank of Ireland may take actions to restrict its Irish subsidiary PFS card services. Notably, PCSIL contributes 27% of the group's global revenue. The CBIS concerns relate to PCISL's anti-money laundering, counter-terrorism financing, risk and control frameworks and governance. But having said that, there continues to be some gainers on the ASX that maintain the ASX 200 momentum. The biggest news of the day came from BNPL giant 𝐊𝐴. 𝐊𝐴 has expanded into Europe and the Middle East with the acquisitions of European buy now pay later provider Twisto and the United Arab Emirates-based Spotii. Zip expects to complete the Spotii acquisition in the third quarter and the Twisto acquisition in the fourth quarter. Notably, the acquisitions have a combined enterprise value of $180 million with a transaction consideration of $160 million, reflecting Zip's current equity interest in both companies. Meanwhile, the stock of the technology company that produces investigative analytics and intelligence software, 𝐊𝐴, remained charged up on the ASX 200. The stock rose after the company announced earlier on Monday that it would launch several initiatives in response to recent market feedback. It includes the establishment of an independent board subcommittee to ensure an appropriate oversight and review of recent matters raised by market participants. And moving on, the stock of the agricultural chemical company Nufarm Limited surged nearly 4% to the day's high of Australian $4.90. The stock has gained ever since the company reported strong earnings for the 6 months ending 31st of March 2021 due to robust demand and channel restocking in key markets. In addition, the stock may have gained likely benefits for the Australian agricultural companies from the proposed UK-Australia Free Trade Agreement, which allows tariff and quota-free access for sensitive agricultural products. Next up, and the stock of the global provider of innovative and cost-effective travel solutions, Corporate Travel Management, gained nearly 5% to Australian $20.27. The stock may have advanced amidst optimism over ongoing vaccine rollouts. Investors may have also lapped up shares after Qantas last week said that a sustained rebound in domestic travel demand was continuing to drive the airline operator's recovery from the COVID-19 pandemic. Well, that's all for now. Hope you enjoyed this edition of Market Movers. Stay tuned for more live updates on 𝐊𝐼 Media across economy, markets and sectors. I'm James Preston with the latest for 𝐊𝐼 Media.